This is London with MarketHedge. Let's pay attention to Bitcoin in terms of the profits, 160,000 in the money. And where was that trade? Just to show you how quickly these can add up from that 106,000 area zone up to the current 117. All right, let's talk about the technicals. Now, in terms of yesterday's function, and we do not want to necessarily thank Jerome Powell for his speech today and what he did, but his speech kind of cratered Bitcoin and a few other assets. So unless you picked up at this specific lower 115,500, if you picked that up, great job. Now, the interesting part is on the specific lines. We talked about the fan reversal yesterday, right? And on the right-hand side of the screen, I've got something very important to discuss here in just a moment. But pay attention to the specific fan reversal. You'll see that actually bulls caught. This is the same drawing from yesterday. Bulls actually caught after the value pickup. Bam, the line did on the 4-hourly maintain this structure. So nothing has changed. Remember that we picked up underneath a specific descending triangle formation here, right? Nice pickup. That was the 4-hourly low RSI, which was a beautiful pickup. We didn't dig that deeply today in terms of those RSIs. Barely got to that 1-hourly on that Jerome Powell news. So the Fed, in terms of no interest rate change. Now, let's take a look at this real quickly in terms of the, you guys got it, 4-hourly, 20 moving average, the hedge. What paid today? It has kept paying the last 20 days. Right, when we have specific long orders stacked below the 20 moving average, they are paying like clockwork. If you've been watching these videos and you're tired of hearing, longs parked under the 20 moving average, and you're tired of hearing shorts parked and stacked, guys, stacked and parked over the 20 moving average for what? For the recoup, for the throwback to this midline of that 20 of that specific Bollinger Band feature. What do you see on the right-hand side? So just pay attention again. Let's just note this again. Hedges have paid like clockwork. They're paying back to the return line, the throwbacks, the pullbacks. Bam. Again today, boom, cash in the bank, guys. Very nicely done. Now on the right-hand side, let's talk about the feature that has probably gotten everyone talking. I would imagine that you have already noticed it. Let's just keep I wanted to bring this over a little bit if I can. There we go. Now in terms of the specifics, let's pay attention to the 20 moving average on the daily time frame. Let's go ahead and add in the specific Bollinger Band. Do you see how tightly this is in terms of the tightly wound we are? Now, that means that we're parked right on the 20 moving average. Why do I say that? Because when price is on the 20 moving average or close to it, you're going to see the Bollinger Bands continue to constrict. So this is on the daily. And in terms of this, I want you to pay attention to one thing, not just this top line resistance, but there's an indicator that you can look at. I think it's going to be helpful for you. You can go under indicators. Go ahead and type in Bollinger Band or BB. You'll get Bollinger Band's width. Okay, Bollinger Band width. This is the Bollinger Band width telling us how compressed we are. And I just want to show you, it is impressive that we are so constricted. We're more constricted. Guys, we've been constricted on the daily a few times precedingly here, but you'll just go ahead and run this back and see how few times we've really been this compressed and the significance of the moves. You can back test that. I encourage you to do it. And I want to ask you a question. Do you think that we are in an ascending triangle? It's close. I like to see the patterns, and normally when you don't have a place to go in terms of what the commanding technicals are, I'm going to encourage you highly to look at the line chart on the 4-hourly and look at the line chart on the daily. Why? Because those are pattern plays with larger expectations in hotspots like New York, on trade desks, etc. So 20 moving average, the hedge is paid. We've got potential daily ascending triangle, right? Gives us a breakout level. What is that? 120,000 is going to be a breakout level if you wanted to trade the breakout in a pattern up and over. Now, what's going to be the question? If we get a throwback on that specific ascending triangle, we'd love to trade them. We'd love to short over them. What's the danger zone there? Because we have a run up. Yeah, we have a run up, and anyone who's trying to make a pennant out of this or anything otherwise, we do have higher targets. Remember, from the bull flag, we're looking at that 135 for the repeat of the flagpole. You guys can review the prior videos if you like, in terms of just kind of catching up with the technicals. This is London, former hedge fund owner, private, non-SEC, not financial advice, and we're going to be excited real soon real soon about these trade rooms in the back. We're almost there. We're just tweaking things so it can be ready for all you guys to come in the back, and we're just going to be trading. We're going to be trading. We're excited about 2025. The residual love it. You guys have a good rest of your summer if you're out having fun and vacationing. Appreciate you spending 5 minutes with me. This is London. We'll talk to you guys soon, and shout out to the VIP. Take care. Bye-bye.